Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, July 2nd, 2013. And in this video, I'll be covering the charts on the list of my favorite gold and silver mining stocks. These trade ideas were posted on the site last Wednesday. That is the June 26th. So I put these trades out there. My personal plan is to scale into these trades as silver, particularly silver. I'm a little more fond of silver than gold right now. However, I'm going to cover both silver and gold mining stocks here. But let's take a look and dig into these charts. Starting here, we're looking at AEM, and this is a monthly time frame. I plan to do a little bit, either a video or some static charts and commentary on gold and silver, and share my thoughts there. I do think over time we could see some more downside. In other words, the bear market in both silver and gold may continue, and if that's the case, these mining stocks will ultimately have more downside. However, I do feel that right now is a time to play a bounce on the long side, which could be, could last for quite a while. But either way, let's take a look here at the AEM monthly chart. What I've drawn here, this is a long-term uptrend line going all the way back to 1998. If you look down here, this is the year, and these are the years, I should say. And so this trend line generates in 1998. AEM broke that trend line back in excuse me, late 2011. Pushed back up, made a back test of that trend line, and has since moved down. Now, a simple method, if you look at this is really a large wedge type pattern. You see the negative divergences below, not just from this peak to this higher peak here. I drew that trend line, that upper trend line, just to really define a wedge. And but if you go back and looking at the peak here in the RSI and the PPO as well, that goes all the way back to this point. So you're making higher highs in price. Here's 1, 2, 3, while you made significantly lower highs in the RSI, PPO, and a lot of the other indicators. So that that tells us that was the there were warning signs that the bull market in a lot of these mining stocks and gold itself was coming to an end, and that did here on the breakdown and ultimately on the back test of that primary uptrend line. This, if you were to draw a wedge pattern as I did here, a simple measurement, if you take the distance from the top of the wedge, the widest part that is, the top to the bottom of the widest part of the wedge, and then you add that to the breakdown point, that gives you a rough estimate of where prices may go. By all means, not a perfect tool, because every wedge can play out, sometimes beyond that measurement, sometimes fall well short of that. So let's just remove that line. But that would have prices coming all the way down here. I don't see that to be the case. I think if AEM ultimately reached this downside target around $20 or so, it would be a heck of a buy. There's a very nice support area there. But again, we'll have to cross that bridge when we come to it, because this is a monthly chart, long-term time frame. We'd have to take a look at the weekly, the daily charts, see how they're setting up as well at the time. If the stock did reach that level. But as of now, I am long and have continued to scale into AEM, or plan to scale in, I should say. I took some positions last week before I left town. Now a lot of these stocks are approaching some resistance areas. We'll probably see a pullback. As I mentioned on the site last night, all of these trade ideas that I posted were up in the mid-teens as of the close yesterday, and that's just in a few trading sessions. And I think one of them, TRX, I believe, had gained as much as 30% from where that post was put out last week, and dropped back to still, close within a 20+% gain as of yesterday. So here we're looking at a weekly chart of AEM, and this is a very nice support level. If you take a look here at the price at volume histogram, I use this a lot in trading. You can see there were a lot of trades have taken place, and when you come to these thin zones here, where these histogram bars drop off, that's typically a support shelf. Prices were to fall below there is very little support because very few trades had taken place below this level, this support line. But again, at the very least, I would expect a reaction, meaning a pause, a bounce, a consolidation. In this case, I'm looking for a bounce. Other things that I've noted, most, if not all, of these stocks, if you follow my cursor down here on the RSI, have reached or exceeded, oversold levels where we've had some major bottoms put in. If we'll follow the vertical line here and the crosshairs, we had this bottom here back in late 2008. Next time the RSI had reached our oversold levels was back here. We sort of skirted along the oversold readings for a while there, but that did launch a nice tradable bottom there. And once again, we're actually more oversold now than we ever have been, going back at least 10 years in this stock. Here's the PPO. If you look at the histogram, as you can see, the PPO is poised to make a bullish crossover. Looks like we have some divergence there, with prices making a lower low here than this previous lower low. Histogram, I haven't drawn the line here, but it looks like we're making a higher high in the actual PPO itself, which is positive divergence. Now, something that I'm looking for, and I'm seeing on some of these gold and silver stocks, but not all of these, I'd really like to see some capitulation type volume. In other words, if you look back here in late 2008, early 2009, you see this huge surge in volume, especially on the move down. That is capitulation, people throwing in the towel, and that usually accompanies very lasting bottoms. At this point, I am not seeing that on AEM, at least not viewed on this weekly chart. Some of the stocks I am seeing a volume that looks a little more capitulatory. So let's take a look, drill down to the daily chart. For those of you in the stock, as I mentioned last night, longer term traders that believe that we may have put in a significant bottom, or even the bottom in AEM and some of these other gold and silver stocks, which is possible. You shouldn't be overly concerned with all these near-term resistance levels. At least that would be my recommendation. Set a scale-in strategy. Put a set amount every so often. You want to put, let's say, ultimately you wanted to have a position $10,000 in each of these stocks. You could start out doing $2,000 a week for the next 5 weeks, something along those lines. Comparable to a dollar cost averaging strategy in a mutual fund is what scaling in is in trading. So you're buying at set increments in time. However, shorter term traders may want to take some profits if you took more than just a small fractional position last week, or even a fractional position that you have a sizable gain, 15, 20, 25%. You may want to book those gains and look for a pullback. As you can see here, I have a descending channel drawn on AEM defined by these orange downtrend lines. So that is going to be our first resistance level, which we are just shy of now. Bullish once we break above that, but if you also look at these horizontal lines, we're at the first resistance level that I've been eyeing on AEM. It's this top of this large gap here, really helps define that level. And as you can see, if you look closely, we'll zoom in a bit, prices did hit that level and have since pulled back. So wouldn't surprise me to see AEM consolidate here. It may just trade sideways for a bit. And of course, remember, sideways trading in these gold and silver mining stocks, these are about the most volatile stocks, right next to the shipping stocks. As far as companies that I trade, the mining stocks are right up there in volatility. So if you look here, AEM opened about flat today, and we're already down 2%. To me, that is pretty much flat in a mining stock. That is well within the daily gyrations in these stocks, especially once we start getting these sharp moves off support. So you have to be prepared for that volatility, and that is why I recommend reducing position sizes down and a scale-in strategy. Because if you take a full position size, what's going to happen is on one down day when you're down 2, 3, 4, 5%, most people that will trigger their stop threshold or their pain limit, and it's just virtually impossible to trade these stocks with a heavy position. And large stops, or you can lose a lot of money. So again, position sizing is critical in these stocks, and my preferred method is scaling. So once again, if AEM does take out this level, which I do suspect it will, that would be the next buy point. So if you started scaling in here, you might not want to add your second lot here. I'm strategically scaling into these stocks. I would wait for a little bit of consolidation. I may add, and likely will, on a little pullback here. Might even add some today. We'll see. And then, of course, on a solid breakout above here, especially if we had a consolidation for a few days. And as you see, these are some next targets. This is a pretty solid target here. If you look at all these reaction highs, there was a large gap back here in April 15th, mid-April, and prices came and tested the bottom of that gap several times. So this would be, in the near term, over the next few weeks, couple months, probably my ultimate target for AEM, where more than likely I would be out of the stock at that time. And again, we'll have to cross that bridge when we get there. Take a look at the charts. Maybe they have continued to set up bullish, maybe not. And let's go ahead and move on to the next one here. And that would be GFI. Okay, we're still in the daily time frame, so I'll work my way backwards on GFI. This is a similar pattern, a little bit of a contracting channel / bullish falling wedge on GFI. As I mentioned when I put these names out there, on just about all of these gold or silver mining stocks, what I'm seeing is strong positive divergence on the daily time frames. So we're here on a daily time frame now. If you look at the MACD, very nice, clear, strong divergence, with the MACD making higher highs against prices making sharply lower lows. So there is strong divergence in place. You see it on the RSI as well. Positive divergence. This is my first target, near-term target in GFI. Again, I don't have these targets labeled. I've been taking some vacation time, and I'm not trading full-time this week. But these charts are easy to replicate. If you take a look here, you can see these reaction points, and there's a large gap. So my first target is the top of that gap. For those of you taking profits, remember that I like to take my profits a little bit before the actual resistance level, since you'll often have a lot of sell orders sitting there waiting right at that level, and sometimes the stock will reverse early. Also keep in mind we do have this downtrend line as well that comes in a little shy of that gap. But again, I do expect, after some type of consolidation or pause, maybe a little pullback, I would expect ultimately prices to break out above this downtrend line and that gap level and move on up to this next resistance area here. That would be my next target, and I may, of course, extend additional targets. And at some point, I will put up some official, price target levels where I think the stock is likely to go, as well as some final targets for you longer-term traders. If GFI wants to, I could, see the stock over time going up. This would be more than likely a final ultimate target if I do decide to leave this on as a long-term swing trade. You're talking to more than a double, or about a 100% return. Actually, these stocks were first mentioned here on Thursday at the lows. So let's take a look quickly at the weekly chart. And again, this goes along with my theme in a lot of these stocks. If you look at the weekly chart, as you can see, we are at support. And we're right back to where we were at this previous reaction low, which I believe is the all-time low in GFI. So that is a support level. And look at that hammer. We had just a beautiful, bounce right off that support level. RSI was very oversold. If you look back at the time in 2008, there's the RSI. We hit an oversold reading here. We didn't get deeply oversold as we did back here. Deeply oversold meaning under the 30 level, but recently we have been oversold for quite a bit. Again, PPO is starting to turn up a little bit here. We're about to make a bullish crossover, and on GFI we do see some capitulatory volume. If you take a look here, look at the the rise in volume on the drop over the last few months. So this stock may have bottom. Very quite likely that GFI has seen a bottom. Of course, only time will tell. Very quickly, I jumped back to a monthly chart here, and again, talking about overbought. If we look at these major bottoms, and these are significant price moves. Don't be fooled by just the visual, the chart. Take a look at the price range here. This is a $5 range all the way up to the $25 range. And if you look at on a weekly scale, every time the stock has become overbought, every time it's touched that 30 level, a long-term tradable bottom was not too far away. Sometimes those oversold readings come a few weeks, even a few months early, but ultimately, when a stock gets this oversold, in this case back in 1998, the bottom came years ahead, but we did have some powerful divergence setting up in the last bottom back in late 2008. As soon as that stock crossed below the oversold reading, the 30 level, we had a very powerful move up, and at this point we're more oversold than the stock has ever been in history. This chart goes back to the mid 80s, so we haven't been this oversold before. Okay, I'll start to move through these faster. As I said, the common theme is pretty much the same, which is positive divergence on the daily charts. Is something I was looking for, as well as stocks that have fallen to weekly support levels. So here's HL. This one's been on the site for a while. I've given it some room because I use that as a scale and strategy. Although, personally, I took all profits back a few months ago when I put the stock on a breakout above this downtrend line. We hit that first target for a nice gain. It was a quick move up. Again, something similar to what we've seen recently. So I booked full profits and then continued to scale into this stock. And I think this one has quite a bit of room to go. In fact, I don't plan to take any profits on HL until we get back up to this level here. That's just shy of the 375 area. So there's HL on a daily chart, and again, like so many, we have this reaction back here, reaction low. Here's a reaction high. Several candlestick reactions here. If you really zoom in closely, you'll see there was a failure there, some support found there, tag of that support line here, and again we had this fake out move just like we did in the metal and silver. This is a silver mining stock. We had that big intra-week move below, but prices hammered back to close right on this key support line on HL. So this one I really like, and I'm giving this one some room. KGC, this is a nice looking gold stock here. Looks like a bullish falling wedge pattern. Nice divergences, positive divergences in place on the MACD and the RSI. Would be possible to see this one work its way down within this wedge a little bit. We ran in, again, these stocks were all put here right at the lows. The original post happened to be very timely because those stocks did bottom. Most of those did bottom on Thursday morning. I posted them Thursday at around 10 a.m. And so we had a sharp move up, but we ran into the bottom of this gap, which is the first logical resistance level. So we have since pulled back, or at least are pulling back today. And I do expect prices to ultimately power up, take out this gap. The next resistance level would be the top of the gap, and then ultimately this downtrend line. And a break above this downtrend line would be longer term bullish. That's probably weeks away at this point, possibly days, depends how these things go. So again, if you use a scale and strategy in this wedge, if I were to extend this out, let's just move this up here, extend this line out, we could see prices zigzag down, maybe make a lower low, keep these divergences in place. Would be nice to see, of course, and then ultimately punch out and break out above this bullish falling wedge pattern. And if so, prices, that would be a good first target there around the 750 area. Again, those targets will be updated later. So that's KGC weekly chart. Again, same story. Tag, 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 tag. So here's another one. Beautiful fake out move. As I mentioned, I like these fake outs when we have a breakdown below a key support level. It shakes out a lot of the weak-handed longs, whichever weak-handed longs were still remaining at this point. Probably weren't too many. And that just builds a solid core of holders in the stock. It also sucks in some shorts. can't think of anybody that would really be wanting to short a stock that's fallen so much. These are like powder kegs. You have short covering, you have longs buying, and regardless of a strong downtrend, it's not my style to short. So any shorts that did short last week into there have been squeezed out more than likely this week, and there's probably still quite a bit of short interest, I'd imagine, in this stock that could propel it ultimately over time, quite a bit higher. That's KGC. AU, I'm on a weekly time frame here. Here's a gold mining stock, another nice tag of key multi-year all-time lows here, which is a key support level, and prices bounce sharply off that weekly support level. Let's zoom into the daily chart. Same story, positive divergences. Here's a descending channel, and my first key target is here. I think this one has a way to go. Obviously it likely find some resistance here at the top of this downtrend line, but once we get through there's a nice horizontal resistance level here around the 1630 area, and then as you can see I have a couple other lines and near-term targets marked there. That is a PAAS, Pan American Silver, Metals and Mining. This is another silver mining stock. You can just make off on the chart here. On the very left, there's a reaction low, another reaction low. Prices did move through that support level during the melt-off and meltdown in '08, but that's where we found support here. So again, looks like a whole support area here on the weekly chart. Same story, very oversold. Take a look at the daily chart. Actually, let's take a look at a 2-day period chart here on this one. This shows a little bit better what we have. A little bit odd. I had this downtrend line I've been tracking for a long time, and if you look at it, the white lines show a nice long-term bullish falling wedge. Prices had this breakout back here and set up with this other downtrend line, but then fell back within that wedge. So either way, I still think that this primary downtrend line has a lot of validity, so let's watch for a break of that. If I put a horizontal line here, you can see quite a few reactions. So we are at, or did just hit yesterday at the highs, we hit a resistance level in this stock, so we're going to see a pullback. We're already seeing that today. Consolidation. So again, maybe a great time for those of you that missed the initial move to begin scaling in at this point as this stock pulls back. Hard to say how much farther it has to go. Wouldn't surprise me if it goes all the way back down and tags this lower trend line again, and it wouldn't surprise me if this reaction, this pause, is very short-lived and prices just take right off. That is why I'm scaling in. It is very hard to call a bottom in these things. I think a bottom, at least a tradable bottom, is at hand. But again, how you trade them, these can be very difficult because of the day-to-day gyrations. But again, I think this one is worth scaling in, and I think ultimately we go up here. Here's a thin zone, a gap area. These are some near-term targets, and ultimately over time, if this move does have some legs, I could see Pan American Silver going all the way up to this $19.50, $20 area. SSRI, another silver stock, another one of my favorites. Nice bullish falling wedge pattern defined by these orange trend lines. Prices, when we picked it up on Wednesday or last week, we were down here at the bottom. So that's our initial scaling point. Again, maybe we push down. Looking at this wedge and a lot of these other wedges that I'm drawing, we could see prices, come all the way much closer. There's quite a bit of room towards apex. Apex is when these two trend lines come together, and a lot of breakouts occur anywhere 65, 70, sometimes 80% of the wedge. So we could see this one work its way down. But again, these stocks have been tricky, and they're very, very oversold. And so we could see an explosion to the upside as a bunch of longs pile in and short covering. So I'm not going to hold off and trying to, wait for an entry down here. Again, scale in. If it breaks out and goes to the upside, I win. If prices move a little bit lower and then ultimately turn around, I win. The only way I lose is if I continue to scale in, and at some point I'll have to throw in the towel, and I will, clearly share my thoughts when I think that time has come. But right now I'm more concerned about accumulating. We can see a little gap here, which we stopped at yesterday. That's a resistance level, and again, the next resistance after that would be the downtrend line here. That's the daily chart on SSRI. Let's see, weekly chart. Again, here we hammered off the nice previous reaction low right here, right around that area from the drops back in 2008. So over time, here's a nice target. There's a big gap to be filled back here. Let's call it that 850-ish area. That would be, an intermediate term swing target would be that 850-ish area right there. Okay, time flies when you're having fun. I'm already 25 minutes into this. I did not intend this video to go so long, so I'll fly through these. TRX, here's a daily chart. Same story, positive divergence. This is where my first key resistance zone comes in, these two horizontal lines, and then we have this downtrend line up here to contend with. So those are some near-term areas where I'd expect TRX to start to find some resistance again. They're very overbought, so I wouldn't be surprised if we power through these with very little pause or pullbacks. But again, it depends on the sector, it depends on the overall broad market, and a lot of other factors. But there's TRX. I think it has room to go. SLW, here's another silver stock. This is a weekly time frame, and nice support shelf here. This area here, these two lines define a support zone, and we have prices have found support right at the bottom of that zone. Ultimately, you can see a nice big gap here where the crosshairs are, and that's quite a bit up. That's 25 to 2550-ish area. I'm looking at a weekly chart, so these aren't exact. I don't have the the horizontal line isn't lining up exactly where that level would be, but we'll call it 25-ish. So quite a bit of upside looking at a weekly chart, daily chart. Let's actually go to a 2-day period. Look a little bit longer here. Here's a descending channel where prices broke above for a little while, skirted above the top side, and then fell back within that channel. And as you can see here, last week we hammered or tagged and bounced right off that horizontal support line as well as the bottom of that channel, and we're back inside of it. There's our next resistance area right there. For those of you trading it and wanting to book some quick profits, call it 21. Set your sell order around 2130-ish, 2132. You should be fine. May want to push to the top of that gap, but ultimately, once it clears that level, we go up here as the next horizontal resistance level around 2530. That's SLW. And finally, to wrap it up, this is IAG. This one's a gold mining stock, and as you can see here, we had this reaction high from all the way back in 2004. Prices did melt down below that level during the sell-off, the panic selling in '08, but we have since held that support level there so far. Again, like everything else, deeply oversold. This one has the volume looks highly capitulatory. I didn't speak on the volume of all these as I went along, but that's something to look at, folks. So looks like a lot of people have puked this one up, so to speak. In other words, thrown in the towel. So that one may be pounding out or may have put in a bottom here. Only time will tell. Let's look at the daily chart. Very nice, well-defined downtrend line here. So there's one to watch. This is a bullish falling wedge pattern, complete with positive divergences in place. As you can see, the volume has picked up very sharply recently. So your first resistance level or target for those of you wishing to take quick profits, 40.70. I would expect. I'm sorry, $4.70. I would expect prices to more than likely come in and take out these levels around the same time. So I could see over the next few days, if just try to imagine the candlesticks being printed, prices come up here, and then once we break above that level, what you'll want to look for, as always, look for above average volume on a breakout. That helps confirm the breakout. And if we do break above this intersecting resistance level, the next target would be here at, that is the 568, call it 565 area. And then above that, we have another horizontal resistance level around $6. And over time, that one could go, because this, it's quite a bit of an extended downtrend line, and again looking at the weekly charts and everything else, over time will more than likely extend some longer term swing targets up at these higher levels, say around $9 be, just looking at this chart right now. And if you look at this histogram shelf here, might make it all the way up to the 1050 area, and that would be, if I'm in the trade that long, that would be my ultimate, more than likely at this point, be my final target. Okay folks, this has been Randy Finney with Right Side of the Chart, and I hope you enjoyed.